When you see these countries, what's the first thing that should come to your mind? Gold, exactly. These countries are responsible for nearly 40% of the world's gold production. Impressive, isn't it? But when we hear the word gold, what truly comes to mind? Gold has been considered valuable for thousands of years. But let's skip the history lesson, because today, gold isn't just a shiny metal, it's an investment signal. Whenever the world starts feeling uncertain, wars, inflation, elections, debt, one thing happens every single time. Investors run to gold. Why? Because gold doesn't depend on a company's profit or a government's promise. It's not affected by bankruptcy or interest rates directly. Its value comes from something simple: trust. And in times like these, trust is worth more than ever. This year, gold prices have hit record highs, crossing levels many thought were impossible. What's driving that? It's a combination of fear, inflation, and central bank behavior. Countries like China, Russia, and Turkey have been buying tons of gold, quietly moving away from the US dollar. At the same time, investors around the world are losing faith in fiat money, with currencies that can be printed endlessly. So as inflation eats away at savings, gold stands still, or even rises. When the stock market falls, when currencies weaken, gold often becomes the safe place to hide. But here's the part most people don't realize. Gold isn't about quick profits, it's about protection. It's the insurance policy of the financial world. When everything else loses value, gold holds the line. That's why smart investors don't buy it to get rich. They buy it to stay rich. And yes, short-term prices move up and down. Speculators buy, traders sell, but long-term, gold has outlasted every currency, every empire, and every economic cycle because it represents something deeper: stability in a world that's anything but stable. So the next time you see gold rising on the charts, don't just think about the price. Think about what it's telling us about inflation, confidence, and the direction the world is heading. Because when fear grows, when markets shake, and when currencies fall, gold doesn't panic, it shines. Now I'll ask a question and hand it over to Archer. Archer, we've discussed the situation regarding gold up to this point, so when we look at gold today, is it still a smart investment?
Thanks, Alex. That's a good question, because while some people are happy about the rise in gold prices, others are still wondering whether it's worth buying. I'll explain the situation as best I can. Well, rising prices always bring one thing with them: risk. But here's the truth. What makes an investment successful isn't timing, it's time. Because gold isn't about buying low and selling high. It's about holding value through every storm. The people who win in the long run aren't the ones who predict every move. They're the ones who stay patient when everyone else is panicking. Yes, gold has already climbed fast, and it might slow down or even fall for a while. But if you believe in protecting your wealth, not just growing it, then gold isn't just an asset, it's a mindset. In the end, every chart goes up and down. But the one thing that never loses value is time spent holding what truly holds its worth.
Exactly. You're right, because the market doesn't reward those who rush, it rewards those who endure. Gold may shine brightest in chaos, but the real power isn't in the metal itself, it's in the patience behind it. Every investor learns it sooner or later. You can't control the storm, but you can choose what you hold on to while it passes. So maybe that's the lesson gold's been teaching us all along. Stability isn't found in price, it's found in perspective. Because in the end, real value doesn't fade, it endures.